All right, let's go ahead and get started. Hello, everybody, and well, thanks for spending some time with us tonight. The reason I set this up is I've had several questions, and as you guys know, we kind of started off there a little bit rocky with the indicators. We're still trying to get our processes down a little bit, and so I just thought it'd be good to just check it in and say hello, and really open up the room. And I'm going to walk you guys through some charts, but then I'll let you guys answer some questions. So feel free to ask whatever you want. And we mentioned this during the webinar, but our purpose is really to build a community. It's why we made a decision to offer the free indicator, and it's why we're not price gouging anybody. And the sole intent is to be able to offer as much value as possible. And so as I was answering some questions over the weekend, it really kind of dawned on me that I I kind of missed the boat a little bit. And let me explain. So the whole thought process was, we're going to offer a free indicator, and then we have a pro version, as you guys know, it's $37 a month, and then there's a course. So the challenge with that was there's a lot of information in the course that is very handy to be able to utilize the pro version. And so as I was answering emails back and forth, I was like, man, I think I kind of skipped a step here. And so what we decided over the weekend was we're going to give the course away for free. So those who have purchased the course, you are going to get a refund. Okay. And we're just going to give it to everybody who has signed up for the free buy sell zone indicator. So you guys can go in there and, just poke around. So inside of that, you'll see some of the stuff that I'm actually going to go through tonight. In addition, there's some really good stuff in there about trading psychology. And I'm not just saying that, guys. Like, I'm sure you've sat through enough webinars. Maybe you can sniff bullshit by now, but what I say is real. My struggles are real. I'm no different than you guys. The only difference is I may be a little psychotic. And what I mean by that is I didn't know how to quit. I mean, I literally would spend, I'm not even kidding you, I would be in the office at 4 a.m. on a Saturday morning, and I would be sitting there plugging away, back testing on an Excel spreadsheet. I'd be doing this manually. And it took me a long time to get to a point where I had a system that not only was profitable, but also fit my personality. I mean, someone could hand me a system that wins 80% of the time, but it has it has a lot of trades, and those trades have a really low reward to risk. I wouldn't be able to be successful with it because that's just not how my mind operates. I believe that if you go for areas where there's a higher chance, higher probability of getting a big move, then there's just less stress on the trade. I don't have to win at a high percentage, and frankly, I don't want to. I don't want to have to. Paul Tudor Jones. Anybody here familiar with Paul Tudor Jones? Anybody know the name? So for those who are not familiar, I would urge you to look him up. If there were a Hall of Fame for traders, he would be in it. Okay. The guy's a stud. He's a billionaire, and it was made from trading. This guy even said, and I'm going to screw up the quote, but he said, if my reward to risk is large enough, I only have to win 20% of my trades to be very successful. And even a fool can win 20% of their trades. Now think about what he's saying right now. He's not saying that he wins 20%. Okay, that's not what he's saying. What he's saying is, why in the hell would I want to put myself in a situation that I have to win 85 or 90% of my trades? I mean, that's insane. So this was the whole premise behind what I built with market structure. Okay, my first foray into trading education started in 2016. I had a group of guys, and one of them actually happened to live in my city. I connected with him on Twitter. We met for coffee, and I said, hey, dude, I got this system. You've got a big following. I want you to launch my system. And he goes, I'm not launching anything for you, dude. I don't know you. I don't know anything about you. He said, come into my office. I want to watch you trade for 6 months. That's what he did. So anyway, 6 months passed, and he's like, all right, let's do it. So I used to sit in front of a computer all day long looking at the charts. And it was really, it really burned me out. And I was ready for a change. So I transitioned out of that. And I actually started swing trading. So let me just walk. I don't need to give you guys a ton of background here, but let me just walk through some charts with you. So I gather that a lot of people in this room, and correct me if I'm wrong, but I gather that a lot of people here are more interested in day trading than they are swing trading. Is that a fair statement? Do I have a survey? It'd probably be easier to do a survey, but I don't know if I have one in here. Yeah, okay. So because this is what I gathered over email. And so here was my issue over the weekend. I couldn't answer everyone's questions to the best of my ability because I'm a swing trader, right? I'm not a day trader. And I was pretty clear about that during the webinar. I don't day trade. But there's no difference between structure on a daily chart or a weekly chart versus structure on a 1 minute or, you know, a 1,000 tick chart. It's all the same. So you can see what I have here. I have the ES futures. It's the one I'm most comfortable with personally. I'm sure I know some of you guys are trading currency futures. I know some of you guys are trading oil, NASI, whatever. I have a 1 minute chart. So if we go into our indicators, this is what the majority of you guys have, except yours doesn't say V22 because you guys have a free version. The difference between this one and the one that you have is this one has the ability to, I can bring zones from a different time frame onto this chart. So if I wanted to see zones from a 15-minute, I just click this guy, type in 15-minute, and it would populate on this chart. But what I have, the inputs that I have right here will function the same way as what you guys have. So for those who watched the video on inputs, you probably saw that these are the settings that I use. I've been using them for years. They work really well. They work well on a daily and weekly timeframes. Well, I went into the charts over the weekend and I started looking at lower timeframes, like tick charts, which I haven't looked at in a really long time. Forgot how fast they move. And then I started looking at like a 1 minute because I just, there's something about minute charts that I like, with the exception that sometimes you get really large bars, but that's okay because you can actually use those large bars to your advantage. But that's for another day. So, all right, min lower closes. The name is confusing. I talked about that in the video, but that's because when I was having this coded, which you can see how many times it took me to get this right. That V22, well, that's how many iterations I went through to get this right. And I haven't removed that because it's just a reminder of how long I struggled to get this perfect. So the min lower closes I just so happened when I started building this, I sent this programmer, not the guy that's in the room today, Alex. In fact, he is on the team. He is the programmer and truly the wizard behind the curtains. He's in the room tonight with us. And then Taylor is also in the room. I sent him a video, and it just so happened I was looking at shorts. And so this happened to just be the name he gave it. And I just I know what it means, so I didn't really worry about it, but it's confusing. This is, if I'm looking at a chart, so I just set it to 1. It's going to confirm very quickly. And that's great if I'm trading a daily time frame or a weekly time frame. It actually works out really well. I showed you guys some of the data from our testing. It's incredible. However, if I go down to a 1-minute chart, it was too noisy. Now, you guys may have already come to the same conclusion yourself. If not, you quickly will. It's noisy. Now, you have to get to a point where you can see through the noise, because even though it's noisy, it's still very effective. But you can see this zone here, it prints on this candle, because that's the first candle that gives me the higher close. Now, this zone pattern here that you see, well, you have like your up move and your down move, and then you go up again and down again. So it's just, it is actually basing this zone off of this little guy here, and then you get your move up. And so it's going to be using this high to confirm that zone. And it's the 1 is how many closes above do I require before that zone's going to print. That's why it confirms so quickly right there. Now, when I started looking at these lower time frames, I was like, man, that's there's a lot of zones, and I want to reduce that. And so when I used to day trade, I would use 3. 3 was my number that I would wait for confirmation before I would print a zone. So I just came in here and I said, all right, you know what? Let's just take this and move this guy to a 3. All right, so now you can see the zone shifted. It moved from this candle to this candle. So it's now requiring 3 higher closes. And when you think of these zones, I want you, it doesn't have to actually come back into the zone. It just, for me, if it gets within 2 ticks, I'm a happy camper, right? So like if I were, say that I'm a guy who only wants to be trading long, well, you know, I'd have some losses back here, and then, you know, I'd have a winner here that would make up for any losses that I had back here. And so then I decided I'm going to go ahead and test this. So I spent several hours, 5-6 hours over the weekend, and I tested it. I tested on a 987 tick chart. I tested 2 different ways on a 1 minute, and the results were very interesting. And then I had Alex start coding it up and to give us the ability to rip it through a massive test. And this will be a test that would allow us to go back, depending on how much 1 minute data we can get, you know, potentially 12 years. I don't know if we'll be able to get past that. It's 1 minute's very different than daily. Anyway, so my whole intention was, how do I reduce the number of trades? Because I don't want to be sitting here taking, you know, 50 trades a day. So I had 2 thoughts. All right. And then I'm going to show this stuff to you guys. I try to keep it very simple, but I wanted to only trade what I call the overlap. We talked about the overlap a little bit during our session. Was that just last week or yeah, it was just last week. Yeah. Maybe it was a week before, wasn't it? Yeah, we talked about the overlap during our session, you know, 10 days ago. Let me show you what that actually means. So on this specific chart, you have two zones. You have this zone here, and you have this zone. All right. Let me use a different line. This section of the zones overlap, hence the term overlap. Now, the whole premise behind the overlap actually wasn't meant to be done on the same time frame. It was meant to be done on different time frames. The whole idea behind it is actually, I've never seen it before. I'm sure there's other people that have looked at it or thought of it, but just couldn't figure out how to do it. The whole idea is very simple. If I'm trading two time frames, so say, for example, I've got a 1 minute, which I have here, and I have a 5 minute. Well, my 1 minute could turn bearish like this here, while my 5 minute is still bullish. So the overlap waits for price to come into the higher time frame zone, and then it waits for my lower time frame zone, which I call my trading time frame. It waits for the trading time frame zone to agree structurally with the high time frame, but the zones have to overlap together. And what I found was I can get an edge by doing that. Not only get an edge, but I can increase my win percentage, and I can increase my average profit per trade while decreasing my average loss per trade. So I started seeing this, and I'm like, okay, I'm going to, instead of testing the regular buy sell zone, I'm going to test the overlap. So I'm going to switch this out, and we're going to do an overlap. All right, so inside of the overlap, there's two versions. There's one version, which is not actually available yet, but I'm going to go ahead and show it tonight anyway. It has what's called the auction zones. So the auction zones are meant to be a momentum play. So what it does is it combines market structure with momentum. So it's going to use the market structure and look for an overlap with momentum. So what I'm going to do here is I'm going to apply this to both a 1 minute. My high time frame is going to be a 1 minute. My trading time frame is going to be a 1 minute. And those are going to end up being steel blue, which is actually this color here, and then gold. And then I'm going to apply my buy sell zones. And my high time frame again is going to be a 1 minute, because I want to actually wait for the overlap to happen on the same time frame that I'm trading from. And I want to use 3 for my min lower closes and make sure I always have this checked. And then wiggle, that is how many ticks away from the zone. So like, for example, you see how these two zones don't actually touch? They're like 1 tick apart. Well, if I had 1 here for wiggle, then this would still show as an overlap zone, even though they're not actually touching. But I just want to keep this clean. So I'm going to do 0. I'm going to hit apply. All right, so now I have a bit of a different look. So here's the other thing that I did on my test. I would trade any time price came into a zone, I would wait for a green candle. So I've got price comes into a zone here. I'm going to wait for a green candle. My entry is going to be very simple. It's going to be two ticks, let's see where we at. So the high of that bar is 43. It's gonna be 2 ticks above my first green candle high, unless I get a close below the low of that candle first. So in this example, I have a green bar. This is what I'm going to call my signal bar. I do not get an entry above here prior to closing below it. So that signal bar is done. I'm not going to trade it. I'm going to wait for the next green bar. That happens here. So this candle, my high is 43. I go to 43.50. So I would take a trade here. My stop, very simple. It is, hold on one second. All right, so my stop is going to be using the ATR. The reason I'd use the ATR personally, twofold. One, it accounts for volatility. So if the market is highly volatile, my stop is going to increase. And if my stop increases to a point that I'm not comfortable with, then I don't have to take a trade. If the market is in low volatility environment, I can trade a small stop, and therefore maybe I can trade higher contracts, right? The other thing it does is it removes any decision-making that I personally have to do. I don't want to be sitting here trying to figure out where do I put my stop and where do I put my target. That is not the job that I'm doing here, right? That information should be done before I take a trade. I should always know my risk. I should always know my exits anytime I'm getting in. If I don't, then personally, I can't trade. That's just not the way I'm built. So I'm going to enter above this candle. Okay, so my entry is going to be there. You can see marked by the blue line. I'm going to be long. And then my ATR is always going to be whatever bar is immediately to the left of my signal. That's just going to be this guy. Okay, so this is what this specific trade looks like. So I think it's going to log a trade. Hold on. So here's my entry. There's my stop. Okay. My target is up here. So it looks something like that. Okay. Hold on one second. Any questions? You guys have any? Because I know I'm covering quite a bit of stuff. Again, I didn't have a format for tonight. I'm literally just improvising. Ari, hold your question on the arrows, okay? We'll come back to it. All right. So let me ask you guys something. What do you guys think of that risk reward? Look good? Kind of scary. I mean, what do you most people don't trade this way. So it's insane, right? Now, it's 1 to 4, Chris. Yep. So I'm going to risk 1 to make 4. That's what I put in here. And there was no magic sauce behind it. I just picked it. I don't like to go below. I definitely don't go below 3. But I don't like to go below 4. So you can see what would happen here. You know, it's pretty straightforward, right? I'm going to get stopped out right there. And then here's what happens. My zone's done printing. So I take a loss. All right. So freaking what, man? So what? And then what happens? I have a sell area. I have a sell zone right here where I'm going to come in. Here's my red bar. So we're going to do the same thing on the downside. And here's what this one looks like. Entry, stop, target. And you can see I just let this thing just goes back and forth. It's probably going to go up there and stop me out. Nope, nope. All right. This is actually a really good trade to take a look at. Okay. So I don't get stopped out, but I also don't hit my target. Let me tell you something. I actually really like this. I'm going to tell you why I like this. Because if I'm in a trade, whether it's going in my favor or going sideways, I don't have to really worry about the market and what it's doing. I don't have to sit here and stare at it. I don't have to be on pins and needles. I don't have to be nervous and, I was going to say biting my fingernails, but I do that anyway. Bad habit. But you get the idea, right? And so the other thing that I don't want to do, I don't want to carry a trade into the extended hour session. Does anyone know why I don't want to carry that trade into the extended hour session? You guys trade futures. Oh, yeah. Oh, my God. Those margins. I mean, what they go up like what, like 15 times? It's crazy. So I don't want to do it. So I close. So this is just what I do with my test. Okay, so I'm just kind of walking you guys through the test. Here's the other thing that I would do. Let's just say, for example, I mean, guys, look how good these freaking zones look. It's insane. This is what I saw, and I'm like, oh my God, I got to test this. Okay, here's a perfect example. So, God, this day you would make a freaking killing. All right, let's just follow this day with me just for a second. I was so excited about this that I was having a hard time sleeping. All right, so here we have a sell zone. We come into it here, I have a red bar, right? I never get an entry. So it's a moot point. No, it doesn't matter, okay? I then get a blue zone. Well, I get a blue zone down here. I don't get an entry. I get a blue zone here. I don't get an entry. I have a zone, a yellow zone here that is within exactly 2 ticks of the zone low. So that's going to qualify for my signal. So I'm going to wait for a red bar. Here's my red bar. Okay, so then I would come in below this candle, 2 ticks. So there's my entry. I'm really screwing this up. Keep all kinds of drawing tools turned on. All right, so I'm short. Here's my ATR bar. Here's the profile of the trade. All right, so we clearly don't get stopped out. Here's my take profit right here. Again, think about this, guys. If I wasn't in this short, I'm taking a trade here. There would have just been 1 loss. I would have had 1 loss here, but I'm not taking the loss because I'm in this other trade. And I'm just going to take whichever one sets up first. There's no magic sauce here. I'm just following the formula, right? Because look, this is one thing I talk about in the course, and I'm going to digress here for a second. But one of the most important things that when I hired this trading psychologist, one of the most important things he taught me, which you guys are going to agree with this 100%. Retail traders like ourselves, I call ourselves retail traders. We are rigid with our expectations, but yet we're flexible with our rules. So think about what I just said. Rigid expectations, flexible rules. Does anyone see a problem with that? I mean, think about what I'm saying. Like, if you guys are testing, have you guys ever do we have anyone in here who's done a lot of back testing, like actual back testing? Anybody? Have you ever, all right, be honest with me, people. Have you ever gone up to a trade that you should have recorded in your spreadsheet, but it was an obvious loser, so you don't record it because you're thinking, well, if I saw that in a real market environment, I wouldn't take that trade. God, it's so tempting. it took me a while to accept all this. And honestly, it wasn't until I did that I actually started doing a lot better with my trading. I mean, I could actually measure my performance. If you can't measure your performance, you cannot improve your outcomes. So again, this is my first setup here. I come into the zone and then price keeps going sideways. And there we go. I'm out. So we're done with this trade. Now look at this trade, guys. My entry, 65.50. My exit is 45.50. Can anyone tell me how much money that is on one contract? Anyone? Come on, the ES is a popular instrument. Come on, someone knows the answer to this. It's 20 points. How much is the ES worth per point? $50. What is 50 times 20? It is $1,000, guys. All right, let's keep going. This one's even more beautiful because it comes right into my zone. I get some arrows there too. The arrows are just divergence, guys, okay? So we come into the zone. Now this is a zone 2, right? Because I count zones. I've got a 1 and a 2, but in my testing, I took all zones. I treated them all equal as long as the age of the zone was not more than 1 trading day. So I would take a zone from the prior day during my current day session. So now here's my green candle. I'm going to get long 2 ticks above here. And it just so happens this one has 22 points. And you can see what happens, right? I'm out. Here's a day. We take 2 trades. We have $10 in trading commission. And we make $2,100. Good God. This is what I thought when I was testing this over the weekend. Time to call it a day. Well, no, I actually don't believe in that. I let the data tell me, man. The data tells me when to call it a day. If the data says, Mark, stop trading after you've made $2,100, then I'll stop trading after I make $2,100. But Christopher, I bet you it's not going to tell me that. See, the data is agnostic, right? It doesn't care. So let me ask you this now. How many losses can I now have and still have a really good week? It depends on how volatile the day is because my ATR determines my stop. But I can guarantee you it's going to be a handful. Oh, and that reminds me. Someone asked how I take what my target is. So I am using a 1. I'm sorry. I'm using a 2 ATR for my stop. 2x ATR.
Yeah.
So the ATR on this candle is 2.61. So I'm going to take that times 2, and that's going to be my stop. I'm going to take it times 8, and that's going to be my target. I am going for a 4-to-1 reward to risk. So if I'm risking a 2 ATR, I'm going for an 8 ATR. I am using a 7-period ATR. Now, that's really aggressive, okay? 7-period is only looking at the last 7 bars, so it's adjusting for volatility very, very quickly. You can see it here. Boom. So I go from a 191 all the way to a 3 in 2 candles. So, all right, now let me get into the test here. So let me pull up some spreadsheets. So first I want to walk you guys through the tick chart. I did a tick chart test, and my testing period I kept very similar across the board. I tested 9/14 to 11.2. And I'm going to tell you why I tested that period. This is why. Okay, this is my testing period. So the reason that I had this period is because of this action here. So you can see that in this period, it's not like we're straight up. In fact, I'm only outside of the chop from here to here. You would expect if I'm a trend trader, I'm going to expect to flipping crush it here. If I'm a trend trader, I'm going to expect to really struggle through here. I just would. And so I wanted to see how it panned out. And this is no surprise. Okay? No surprise here, guys. Now, you might look at this bar and think, well, how come you didn't make any money on the short side? I'll tell you why I didn't make any money on the short side, because the freaking market gapped down 20 points and then immediately went straight down without pulling back another 40 points. And then that's when I started getting trades. I was like, are you freaking kidding me? I had to wait for a 60-point move before I would ever retrace. And so I got crushed that day. And it's okay. I mean, it happens, man. It's part of the game. And this is my whole point with people, novice and unsuccessful traders. I hope I don't offend anybody, but you guys are flexible with your rules and rigid with your expectations. I have learned to be the exact opposite. I am flexible with my expectations and rigid with my rules. In fact, I'm so damn disciplined, it's disgusting. I mean, my entire life is that way. Just from the way I wake up to my morning routine, everything. It's all very important to me. So let me show you some numbers. All right, so this is actually, and I haven't talked about this, but I have this really cool tool that allows me to just click. You saw me clicking on the chart, right? So like when I click on the chart and it logs a trade, it actually gives me all this information. And I can even, if I want to do filters, I can even click filters here if I want to do filters. I'm going to tell you why, Vic. I'll tell you why that's a great question. Give me 1 second to get to it, please. Okay. So that's what you see here. Like it's either true or false, whether the filter was applied. So again, at 914 to 11.2, 987 tick chart. 111 longs, 120 shorts. I paid 555 commission for my long, 600 commission for my shorts, for a total of $1,155 in commission. Damn, that's a lot of commission. It's a lot of trades. And here is how that nets out. $5,300 minus my $1,155 brings me down to like what? Call it what, $4,200? $4,200, guys, per contract. That's pretty good. So I started looking at this. I'm like, okay, there's something here, right? I'm not just seeing stuff with my eyes. There's something here. And I'm a very disciplined tester, by the way, guys, very disciplined. I don't do this for fun. I do it to get to actually collect the data. But I wasn't a big fan of this. And you know what? It actually looks exactly like that chart, doesn't it? It looks exactly like that ES chart. Not terribly surprising, I guess, but I mean, you don't ever really lose a ton of money on any given day. But I'm like, I think we can do better. So I've always personally been a fan of 1 minute charts. So that's what I switched to. That's what I'm showing you guys tonight. So I switched it over and I said, all right, let's go take a look at the 1 minute. Hold on. Same exact testing period. 26 trades, 36 trades, 62 total, a little bit better. $12,200. A very nice balance between my longs and shorts. That's what this is. On the other one, it was heavily long. I forgot to mention that. Long, short. This one, long, short. Very nice balance. And check that out. So by going to a 1 minute, I'm able to move from something that looks like this to something that looks like this. Now, look, I'm going to be the first one to say this is a small testing period. I don't have any reason to believe at this point that I couldn't definitively say that this is going to hold up for the long haul. So at this point, I can't trade this personally. It's just not how my mind works. And look, I believe in 100% transparency. It's kind of what the whole premise of this. Look, I'm bringing you guys in here. We're building, my plan is to build a community. That's it. And I want people to see what I see. And there's a lot of sharp minds out there and a lot of different ideas. I've learned a lot from the people that I've been with over the last 3 years. And so that's my whole premise behind this, is really opening the doors. So the next step was calling up Alex and being like, dude, how much free time do you have? He's like, none. What do you need? I need to show you something. I mean, we already have most of the script written, right? Because we're already doing this in stocks. We're doing it on weeklies and dailies. And so I'm like, look, I've just made a few tweaks, man. Here are the tweaks I've made. How hard would it be to code? So he got to work, and we're in the middle of iterating right now. Okay, we don't have it completely perfected yet. But here's what's really cool. When you move from a test that starts here, right? This is, just call it like a proof of concept. You know, think about it in terms of you're a startup company and you got to prove your concept before you're going to go out to the masses, right? Well, that's what, you know, I spent 6 hours over the weekend ripping through charts, trying to prove the concept. To say, is this even viable? Is it even worth Alex spending some time? My conclusion was it absolutely is worth Alex to spend some time, but I got to convince him now, right? Because it's his time. So we started doing some iterations. Now, let me go back to a question. Why do I use a fixed stop versus a trailing stop? Because, Vic, I don't have an objective way to trail built into my backtester. That is the reason. And I do have a way to manually set stops and targets and exits, but it would take me twice as long right now to run that test. And I was just trying to prove a concept. On our backtesting engine, once we move from a proof of concept and we move into actual, like, I don't know what you want to call it, the test phase, we'll just call it the test phase. We have that ability. Okay. So we have the ability to move to break even. We have the ability to move to, move our stop. That's where we'll test it. I'll let the machine do that brain damage. Okay. So here's what I have now. Now just bear with me here. This is a lot of data, guys. But this is the level that we play at. I personally believe, and I don't just say this, look, I'm not an egotistical guy. Okay. I'm a very humble person, but what we have accomplished at the retail level just doesn't really exist at the retail level. This is quant stuff. So let me explain this a little bit. I'm going to lose most of you if I go deep here, but every zone gets its own unique ID. Okay. And you can see it has a date stamp and a time stamp. And then outside of the unique ID for the zone, I have a pattern ID. And that pattern they're my signal bars, right? So I know that this zone, it confirmed on May 19th at 4:49 a.m. Okay. I had a trade where price came back to that zone at 11:26. This would be a red candle because it is bear. Bull bear. Yep. And this stands for buy sell zone red. So yes, red candle. All right. So I've got a bunch of information in here. I've got the ATR, I've got the trend on the trading time frame, the high time frame. I even have information over here about my high time frame zone. So I can come over here and I can actually get a feel for what that high time frame zone looked like. So then I've got, a bunch of information. I've got we've coded the volume percentage inside these zones. So I've got how much volume lives in this zone. HTF size is very important. Basically, think about it this way. If I have a high volatility, so suddenly we have news, right? And all of a sudden you get a really large range candle, and also I have a really large zone. Well, that's what this is telling me. And I can tell you right now, it makes a difference. How else would you know this? Everybody is flying so blind. It's unbelievable. Anyway, I've got all kinds of stuff. VIX, date diff is how old the zone is. Number of trades, how many trades I've had out of the zone. I look at the open, high, low, close, prior day, prior 2 days. I look at the stochastic. I look at the moving averages. Anyway, so this specific test, it has, we're just getting started, guys. These tests, I could pull a chart up right now that has over 1 million trades, and I'm not even kidding. Like, it gets absurd. We're at 400 here. It was just a small sample size, and we did notice a few issues on the test, which is why we start here. I literally, guys, I've been up since 4:15 this morning because when I'm in this, I go through these periods where I get super excited about something and I don't sleep. And so I was down here at 4:15 and I was going through line by line, making notes, trying to determine where on my other spreadsheet, trying to determine, is this following my logic? And if it's not, why? But here's what's interesting. So this is really ugly. I couldn't figure out how to pull this stupid date time out of here. So this is really ugly, but I was running a date diff between the high time frame and the trading time frame zone. And what's interesting is, here's the information. If I were to just take every single trade, it's $7,800 over this testing period. Now, if I remove any zone that had a confirmation time that is older than 1 trading day, I jump. What's interesting about that is that's exactly what I saw in my testing. So anyway, so Alex went back to the drawing board and we, is this the one? Hold on. I think so. Oh, no. This was the second test we ran. The first one is the one that has, yeah. This is where we started. I'm sorry. Again, I'm not prepared. This is where we started. So I literally just go through these line by line. I just make notes. And then once I know enough about the system to understand what's potentially happening. So right now there's just a couple of issues that we're having. Like, for example, it didn't pick up this trade, and I know why it didn't pick it up, because in our original logic that we built years ago says, if I get a winning trade, which you do, you have a winning trade here, and there's a zone present that's already present, wait for a fresh zone, right? So it makes sense, right? It makes sense that I didn't take that trade. So anyway, these are just little things that we're working out. But what's cool is from here, we'll get the logic right. We'll rip a test out. We can do it across all the futures, anything really. It takes a bit of time because it's a 1 minute chart. So, it could take several days to actually crunch through all that data. But then it just goes, if it passes the sniff test, it just goes into full implementation, where we just run strategies, right? So like, I haven't actually taken a manual trade in a year and a half. And so we just have these strategies. We would just add it here, and then it just trades. But that's just too much information to, right? So like, start taking a look. I know you guys have the free version, but look, you guys can still, there's a lot of stuff you can do with it. Let me just set this up so you see what I see, or I see what you see. Again, make this a 3. I would just encourage you to scroll through the charts. Look for those areas where you have an overlap, right? Like, look at that. You can see it, visually see it, right? Boom, overlap, boom, overlap. And here, this is something to pay attention to. Look, this zone printed here didn't trigger till here. So it's, you have a 1.5 hour old zone. I'm not saying that matters, but it's just something to take note of. Overlap. I mean, you guys, I'm just scrolling through the same chart you guys are seeing here. There's nothing. I'm not like, I'm clearly not cherry picking anything. Okay, here's an area. Now here's another thing to think about. This is one thing that I do test is, so you would have been within 2 ticks of your overlap here. So you had a nice move. So if you're someone who trails, you would probably be trailing by this point because it moves 15, 16 points. But when you get to here, you have what I call the opposing zone. So I'm looking for a short. My opposing zone would be a long. So I have noticed these don't work as well. And the opposing zone, the way that I look at that is, it has to, the opposing zone confirmation time has to be after the zone that I'm trading. So for example, the zone that I'm trading, its confirmation was here. That means that this is not an opposing zone. If anything, if I want to be long down here, I have an opposing zone against my long here and here. So if I'm someone who only wants to take longs, maybe I'm bowing out of this trade, I'm bowing out of this trade, and then I guess I'd be taking that one, and then I would not be taking this one because I have an opposing zone up here, right? So anyway, I don't want to give you guys, I don't want to cloud your mind with too many ideas, because I want you guys to come to the table with your own. All right, guys, have a good night. I'll get the video rendered probably sometime in the morning, or I'll just do it tonight because tomorrow I'm gonna be busy. All right, I'm out. See you guys.